Hi, I'm Jen Tipper, Director of Payments at Papaya Global. In this session, we're going to talk about payroll payments and, more importantly, what makes them so complex when you're running payroll across multiple countries. On the surface, payroll might seem pretty straightforward. People work, you pay them. But in reality, payroll payments are one of the trickiest parts of workforce management, especially once you add in different currencies, banking systems, tax rules, and compliance requirements. And if something goes wrong, the impact is immediate, both for your employees and your business. So let's break it down. First, what are we really talking about when we say payroll payments? At the core, it's paying people their net salary after taxes, benefits, and deductions. But payroll payments aren't like paying a vendor or a supplier. They're governed by strict labour and tax laws. You're dealing with things like income tax, pension contributions, and insurance deductions. Pay frequency laws, whether you're required to pay weekly, bi-weekly, monthly. Worker classifications, employee, contractor, gig worker, each with different rules. Data privacy. Payroll data is highly sensitive and really needs to be protected. Anti-money laundering and banking regulations, the requirement to generate payslips and statutory reports. And the most important piece, payroll payments are time sensitive. Employees expect their pay to land on a certain day, and in most countries, it's legally required. You can't just push it back a few days like you might with an invoice. Another thing that makes payroll payments tricky is that no single team owns the entire process. HR owns the employee data and compensation policies. Payroll teams handle calculations and deductions. Finance is responsible for actually moving the money and managing currency conversions and cash flow. And legal and compliance monitor the risk side of things. Without clear roles and tight coordination, things can and do fall through the cracks. And when you're dealing with multiple countries, currencies and systems, those cracks get even bigger. So, what does the actual payroll process payment look like? Here's a simple version. You start by securely collecting employee data, salary, tax codes, benefits, bank details, all of it. Then you calculate gross and net pay, applying local tax rules and deductions. That data goes for approval, often multiple layers, both local and global. Once approved, you generate payment files and send the funds using SEPA, ACH, BACS, or local equivalents. In parallel, you handle tax filings, generate payslips, and produce the required reports. And finally, you reconcile everything, checking that payments landed correctly and that your accounts are in order. It sounds linear, but in reality, there's a lot of moving parts, and any delay or error along the way can have real consequences. Now take that process and multiply it by the number of countries where you have employees. You're now dealing with different data sources and formats, different pay cycles and tax regimes, multiple currencies, banking systems that don't always play nicely together, cross-border approvals and varying local expectations. And cross-border payments add another layer of complexity, FX conversions, intermediary banks, unpredictable fees, and the challenge of making sure funds land on time in each country. What are the big risks here? Here are a few that we see all the time. Disconnected systems, HR, payroll, finance often operate in silos, which leads to errors and delays. Money movement issues. Legacy banking networks make it hard to control landing dates or track fees. Treasury inefficiencies, poor FX handling, and cash flow planning can drive up costs. Misclassification. If banks misclassify a payment, it can trigger regulatory issues or even payment blocks. Compliance gaps. Rules change constantly. Falling behind can mean penalties or legal exposure. And this isn't theoretical. Companies have faced millions in fines for payroll errors, wage disputes, or GDPR violations. And on top of the financial risk, there's the employee experience. Late or incorrect pay damages trust fast. So how do you manage this complexity? The right technology and partnerships make a big difference. We're seeing more companies move to global payroll platforms that integrate with HR and finance systems, payment orchestration tools to optimize FX, cash flow, and control landing dates, and specialist payment partners that give better visibility and reduce costs. This leads to fewer errors, better compliance, and a more predictable experience for employees. And the shift is well underway. Nearly 75% of enterprises are already adopting cloud-based payroll solutions. To wrap up, payroll payments are complex, way more than just transferring money. When you're running global payroll, complexity and risk multiply fast. Internal collaboration is key. HR, payroll, finance, legal, all have a role. The right tech and partners help you manage that complexity at scale. And getting it right matters, not just for compliance, but for employees' trust and your company's reputation. Thanks for spending a few minutes with me on this topic. I hope this gave you a clearer view of what payroll payments really involve and why getting them right is so critical. I'm Jen Tipper, and I'll see you in the next session.